Thank you, Richmond, and good afternoon, everyone, again. You're welcome to the session on value addition, how we can scale Africa's refining capacity. As you probably know, Africa produces a lot of crude oil. However, a huge percentage of that refined fuel is imported. What does that mean? That means we send the fuel out, we pay others to refine it, and then probably buy it back at higher prices. That makes us vulnerable to price changes, vulnerable to supply chain disruptions. And while we're waiting, we lose time to grow our economy, capacitate our people, and build a stronger economy. But things are starting to change. In Nigeria, Dangote refinery is up and running. It produces about 650,000 barrels per day, costs $19 billion to complete. It's a huge achievement, but one refinery is not enough. I think my colleagues at Forvis and Mazars, we did a study, and it's incredible. The refinery utilization rate in Africa is just about 60%, and that includes Dangote refinery. So today's session is about how we can do more, how we can build more refineries, how we can increase our refining capacity, and how we can keep more value here at home. I'm with a very, very decent panel, and I would like to start with Ashraf. Ashraf, from your experience, what strategic considerations should government and investors prioritize when planning for new refinery projects in Africa? And how do we ensure these are sustainable in the long term?
Yes, so thank you very much, and thank you for the people present today and the distinguished panelists. Yeah, so first to start with some context, actually when we speak about building a refinery and then running a refinery, it is actually a complex business. And the overall context of refining is challenging. We see margins going up and down. We had some years of good margins, but then margins went down again. We see sites, refineries, petchem closing in Europe. We see new major capacities coming in Middle East and Asia, which are very competitive. So first of all, to set the tone, we are actually in a quite competitive industry with margins that are tight and with a lot of competition coming from very major assets. So within this context, it is actually then important to think, okay, how do we make the projects we build competitive, but then also the assets we have competitive in terms of operation, in terms of margin. So if we start with the first thing is, when I want to build a refinery, it's really important to first think about the business case. So what are we solving for? I want to be competitive, so do I have access to crude and competitive crude? Do I have access to a local market? And beyond the local market, do I also have access to a logistically advantaged regional market, okay? Because a lot of time what is happening is we will design for the local market, so the refinery is small, and then the costs are high. And looking beyond your local market to the regional market allows you actually to really scale, build a refinery that will be more competitive and will be also serving the region and not only your local market. So then the scale allows you to be more competitive, especially thinking that once you're building a refinery like this, you're actually competing with molecules coming now from Middle East, coming from Europe. There are a lot of imports coming from Europe and also from Asia, Russia. So you need to be competitive in this context. And then you need to see also if you have access to advantage energy access. And that's also really important. If you have access to natural gas, that of course allows you to operate at lower cost. And if not, you need to account for that once building your site to be able to have this infrastructure that will allow you to have access to natural gas. And so the first thing to look into really from a macro perspective is, okay, what I'm trying to solve for. And then based on that, start doing let's say, these feasibility studies at the beginning and then the engineering studies, which are very important. And often we see people going very fast on this. You really need, once you know the business case that you are solving for, spend quality time doing this feasibility and engineering studies, because these are the ones that will allow you to then built for the right, project and the right refinery. And finally, and then we'll leave to the stages. So once you do, it is very important to spend time because it is the moment where it's less costly to actually test and try. Once you move to later stages, and we see it a lot of refineries, it becomes very costly to change. So it is really important that once you design your refinery, it does need to be flexible. Not only think about your local crude, which is also something typical, I think, about only my local crude. You need to be able to process opportunity crudes, and I also need to be flexible in terms of configuration to be able to really capture margin, because as you will see, demand is fluctuating. So I would say this is, let's say, the first, high-level, considerations, and of course, once you have that, you need to run following the different stages of the project, get also the right support from the engineering, from etc. And always keep in mind, and we'll come back to it later, keep in mind what is your investment strategy. Because the investment strategy will drive also the way you deliver the project, and maybe we'll come back to this later.
Okay. Thanks, Ashraf. Business case, understanding the market, and proper planning till the end. Excellent, thank you. I'll move over to you, Dauda. Tell us about lessons learned at SAR. What lessons can be applied to other African countries that are either building or expanding refining capacity?
Merci pour cette intéressante question. Effectivement, nous pouvons apporter quelques témoignages sur des retours d'expérience que nous avons au niveau de la SAR et qui peuvent être profitables pour les autres refineries de la zone. Aujourd'hui, quand on regarde le contexte général du raffinage en Afrique, je pense que mon collègue a fait un peu un bref paysage de ce qui se passe. En Afrique de l'Ouest, les raffineries doivent vraiment s'adapter. En Afrique du Nord, vous avez des raffineries qui sont pratiquement au niveau des normes, donc qui matchent les normes donc, qui sont souhaitées par l'évolution des carburants. En Afrique du Sud et en Afrique de l'Est, aujourd'hui, c'est des zones qui sont très orientées marché parce que les raffineries n'ont pas voulu investir et faire pratiquement les investissements donc, qui leur permettent de passer à des standards nouveaux. Alors, au niveau de la SAR, ce sur quoi je peux m'appesantir, c'est que nous sommes souvent des raffineries qui datons des années après indépendance, 1960. C'est un peu la géographie de toutes ces raffineries. Maintenant, ce qui se passe, c'est que ces raffineries ont besoin effectivement d'évoluer. Quand je dis évoluer, c'est en termes de qualité des carburants, pratiquement sur tout ce qui concerne les aspects soufre, les aspects pollution, mais aussi d'évoluer en complexité. Parce que le plus souvent, ce sont des hydroskimming. Je pense que les raffineurs qui sont là peuvent en témoigner. Donc, c'est des process assez simples, qui ne vont pas jusqu'au fond du baril. Donc, le plus souvent, c'est des raffineries qui s'arrêtent au fuel. Alors, ce qu'on a fait à la SAR aujourd'hui, en termes de développement, c'est déjà une première extension donc, qui note une augmentation de capacité, mais on est aujourd'hui en train de nous orienter vers une deuxième extension donc, qui va fixer les problèmes de capacité. Alors, ce qu'il faut aussi comprendre, c'est que ces raffineries ont besoin d'un cadre macroéconomique en termes d'accompagnement, parce que les problèmes que l'on rencontre, c'est souvent des problèmes d'environnement, donc environnement financier, environnement politique, donc qui font qu'aujourd'hui, leur évolution reste quelque part bloquée. Alors, ce sont des raffineries qui doivent, à mon sens, être efficientes, mais qui doivent être des raffineries tout-terrain. Quand je dis tout-terrain, si je fais le parallélisme, si vous avez votre belle Lamborghini en Afrique, certainement vous n'irez pas loin parce qu'on a un problème de route. Donc, si vous avez aussi un type de raffinerie qui est configuré comme celle qu'on a actuellement, vous risquez de ne pas aller loin parce que vous avez aujourd'hui le marché qui est en forte agressivité. Okay? Donc, on a besoin d'être plus complexe, d'avoir des investissements et certainement, on aura peut-être à parler des investissements. Je vais certainement ne pas rentrer dans ce cadre-là pour le moment, Mais en tout cas, ce qu'on peut témoigner comme expérience, c'est qu'aujourd'hui, on a besoin d'être des raffineries très résilientes parce qu'on a beaucoup de soubresauts dans le raffinage. Si vous regardez au niveau européen, il y a beaucoup de raffineries qui ferment, qui se déplacent vers l'Asie et qui reviennent quelque part en Afrique en termes de concurrence sur tous les marchés que vous avez. Il y a Dangote aussi qui vient de mettre une très très bonne capacité au niveau de la côte ouest. Ça aussi, c'est quelque part un argument donc, qui veut dire que toutes ces petites raffineries-là doivent s'orienter vers une amélioration de leur process, n'est-ce pas, de leur marché et de leur résilience. Donc, voilà un peu ce que je peux témoigner. Et au niveau de la SAR, on est en train vraiment de mettre en place des mécanismes évolutifs donc, qui permettent d'aller vers une meilleure qualité, mais aussi d'aller vers un traitement beaucoup plus conséquent pour couvrir tout le marché sénégalais et même peut-être aller attaquer les marchés alentours. Merci.
Merci beaucoup, Dauda. Thank you very much. I think the main key message is being resilient. So thank you very much for that. Jean-Paul, you can't have a project of billions of dollars without being innovative. So what, in your opinion, are the innovative financing models that are available without putting pressure on local budgets?
It's a great question you asked. Thank you. But before talking about the innovative financing models, I would like to emphasize that the problem comes before. It's not only the financing models, but it comes from the financial institutions themselves. Because if we look at the banks all over the world, they are withdrawing from the investment and corporate banking. They are shutting down these departments. Second, they are with exit Africa region. So we look at some big names. I don't want to say the names, but we all of us name the name. They focus on the private banking and they shut down their investment and corporate department. Second, as Daouda was saying, the international majors, they are selling the refineries. So we can drill, of course, but at the end, having crude alone, we cannot use it. I would like to say we cannot drink crude oil without refining it, right? We cannot put it in our cars to use it, so we have to refine the product. So at the end, we will be short on products, but long on crude, and we will find ourselves long with crude. Crude alone, we cannot use it. If we look at the scheme of the international majors and the strategy of the banks, we notice two major dramatic evolution, and it's really dramatic. Banks are exiting the African region, and international majors are selling the refining business. So the solution starts by first accepting the importance of the refineries, the will and conviction of the African government to save the sector. Second, a comeback of the financial institution and banks to invest in the African continent. And finally, and this is a very important point, the African governments should accept the pressure, because one of the risk mitigation, the 4T, is the acceptance of the risk, because the solution to mitigate the risk is accepting it. The investments divided by 3 instead of 2, government, international majors, and banks, instead of handling between international majors and banks. Now, having said this, the main innovative financing models that can help African countries build refineries and reduce pressure on the public budgets of the governments are mainly the private-public partnerships. Second, blended finance. And third point, there's a very important point, a regional sovereign wealth fund on the scale of Norway's government pension fund global, often mistakenly called the Norges Bank Fund. Africa does have several regional investment vehicles and development finance institutions that pool capital for infrastructure, including energy and refining, but Africa's model is more fragmented. The solution could be a mix of the AFFCs, pools regional funds like AFRI 50, AFC, and some country sovereign wealth funds like Nigeria, Angola, or Botswana, none of them have the scale of Norway's 1.5 trillion asset under management, but collectively they represent a growing pool of the African capital infrastructure. So the strategic partnerships are the main innovative financing model essential and crucial of the growth strategy, especially when acquiring and merging with other local regional trading entities. It gives a competitive advantage and access to established supply chains and product pipelines. It gives stronger negotiating power for procurement and trade volumes. It gives credibility and technical know-how, enhancing their profile for future deals. Strategic partnerships bring flexibility and liquidity, essential to consolidate markets, acquire competitive assets, and scale sustainability.
Excellent. Thank you for the detail. I appreciate it. Wole, how's it going?
Good.
Excellent. Tell us, IOCs, how do you think they can help bridge a gap, if any, between crude oil production and local refining in the continent?
Yeah, thank you. So I think, as the gentleman just said, banks are pulling out. Some IOCs like myself are selling their refineries. So maybe that's not a good thing. But there's always sort of what you call bridge financing. And so my part of BP is the trading arm of BP, which is based in Lagos. What we see is a continent that needs a lot of energy, needs a lot of capital, and you've seen a sort of what we call alternative space of funding coming in from what we call the trading arms. So you have traders or the trading arms, someone like BP, Vitol, Glencore, sort of stepping into that space and beginning to take assets. But you need crude in order to run these refineries. And the investment on the upstream side is quite expensive. So the question then is, how do you support that space? So if you look at production, is either pre-production, marginal fields, and then deep offshore assets. We participate in that space. Generally, maybe not in the pre-production phase, but oftentimes the need for capital arises as people decide to go from phase 1 to phase 2, phase 3, so 5,000 barrels a day, all the way to 20,000 barrels a day. Trading houses have begun to sort of play in that space by providing, bridge financing, either through offtake contracts, working with marginal field players, oftentimes also bringing in our technical expertise from other refineries that we have, and the upstream side also to sort of help increase production. So the way we see it is quite straightforward. There's a need base. It's not charity. The continent needs a lot of energy. There's money to be made there, and with the right partnerships and collaboration, you could actually see sort of support kind of grow quickly. For us on our side, what we also see is our decision making is faster. We're in the region. We do sell the products. We understand the margins of those refineries. We understand the bottleneck that they face. And we're in the country, right? So we do business with all the local banks. We do business with the independent producers. And so we actually know more about the risk that they face, the bottlenecks that they face, and sometimes a bit better than, tier 1 international banks that don't spend as much time in the region and don't understand sort of the pros and the cons. I'll talk briefly around Nigeria as an example, since I'm based there. We've spent the last 4 or 5 years during this COVID period, and funds and investments have sort of gone out of the country. But in the last 9 to 12 months, if you look at top performing currencies in the world, Nigeria, Ghana, and a couple of those countries kind of fall under the radar, same as Senegal. And so the question you start having to ask yourself is, are you close enough to the business to know when those ebbs and flows happen? Investment isn't one-sided. So when it's great, you don't always hear the story that Africa is good. And then when it's bad, someone is saying something is bad about Africa. And one last note, so I used to work in Houston, and I used to be in finance, and worked in London, and now I work in Lagos. And I used to cover, credit solutions for counterparties and debt profiles. And one anecdote is, in Nigeria, we actually have, from our customer base, one of the lowest write-offs ever, right? That's globally. But that's not an information everybody knows. So we need to also share the good news around what we're doing, how customers are performing, and the growth of those customers as they go from the early stages and grow their portfolio. So.
Thanks. Thank you, Wole. Well said. Anibor, what do you see as the most important reforms needed to attract investment in refining?
Thank you very much, and good afternoon, everyone. You are the brave ones. You are the ones here talking value addition. And you can see that even in this room, they've put us in a room where people are talking over us because they don't want to listen. Nobody, let me just take what John Paul said, nobody in this entire facility put a barrel of crude into anything to get here. They had to add value. So I always tell NJ, while you are doing drill, baby, drill, you have to also say refine, baby, refine. Otherwise, our economies will shut down, okay? Now, to your point about what we need to do. You're talking basically about the regulatory frameworks, right? And I like to say that is the starting point of any investment. So you can have great markets, you can have, notice I always like to sit between the traders because they all have the money and they want to invest. But if they cannot see certainty on the regulatory frameworks, not over an election cycle, but over the life of their investment, they're not going to invest. But if I'm just going to pick two, the very first one I would pick would be conducive, harmonized regulations, okay? My brother Dauda is sitting there from SAR, and I'll explain what that means. SAR is in Senegal. Senegal's population as of last year was 18.5 million people. But Senegal serves as a gateway to the MSGBC region, which is Mauritania, Senegal, Guinea-Bissau, Guinea-Conakry. When you aggregate that, you now have 40 million people. Yeah. But it does not make sense if each of those countries has different regulations. So we need to start looking at harmonized Pan-African regulations. When investments are made, you can have large-scale investments for markets that can support that. Without having harmonized regulations, you'll have things like smuggling, and you're not going to have the economies of scale that people would like to invest in. That's the first thing. The second one, which is very controversial in some countries, is subsidies don't work. They cannot be sustained. So you have to have market-based pricing. You're not going to have someone come and invest and then limit the return they can make because you're trying to regulate pricing. You can have regulations, but they have to, reflect the reality of the market and chase out the folks who are not competitive. When you have market-based pricing, everyone will have to work. And you can see what happened in Nigeria. The party is over. The days of, going to Abuja to ask for an allocation no, you have to work now. You actually have to sweat your assets. You actually have to be competitive. So those are the two things I really would say, because at the end of the day, the starting point for any investment, for any investor, is regulation. And we have to make sure we have conducive, harmonized regulations. We're working with the African Union Commission, ARDA is, on putting in place what we call AFRI-6, 10 ppm sulfur specs across Africa. I don't know if you know, but across the continent, we have 11 different grades for specs of gas oil or diesel, ranging from 10 ppm sulfur to 10,000 ppm. For gasoline, we have 12 different grades, 10 ppm to 2,500 ppm. So if I'm coming to invest, and the country I'm investing in, I can't sell to the other regions. Why would I do it? Secondly, if I'm coming to invest, and I can't get market-based return, the financiers, that's one of the big things we've looked at. How am I going to sell? And then the last thing, of course, is thinking about things like how you would manage currency risk and all of that kind of stuff. But the two main things, one, harmonized regulations, two, market-based pricing.
Excellent. I couldn't agree more, Anibor. Just staying with you, you mentioned regional collaboration. So how do you think it will work so that we build shared refining hubs so that we reduce this reliance on imports?
I mean, I just said it. You have to first have, harmonized regulations to support. So I'll give you an example. I use SAR again because when you talk collaboration, we sometimes think it's just of countries, but SAR is and it's not just because they're kind of like a case study on kind of what works, because in SAR you have the Senegalese government with Petrosi, you've got Sahara Energy Resources, that's shareholders, right? Total has a little bit and somebody else, right? These are different countries coming together, and I think you mentioned that one of the things SAR is trying to do is, in the past, because our refineries were smaller, not as complex, like you were saying, you were only looking at localized crude.
Crude, okay.
If you really want to have a refining hub, you should refine. What that means is you have a basket of crude oil. So that's the kind of thing that makes Wole happy and Jean-Paul happy, because they can supply food from across the continent. So but you have to have an aggregation, like what, was it last month or 2 months ago? The NMDPRA in Nigeria had a conference. I don't know if S&P supported them, we did as well, where we brought regulators from 7 different countries across the continent. And the end game is we're trying to put a refining hub. But for that to happen, you have to ensure that you start looking at not just the refining, but do you even have the supporting infrastructure to support refining, right? Where are the pipelines? Where are the import terminals? Okay? And there are successful cases across Africa that show that. CPMZ in Zimbabwe and Mozambique is an example of a pipeline, 2 countries. Petrosea's pipeline that runs from Abidjan to Yamoussoukro is an example of a pipeline that makes sense. So you have to not just look at the refinery itself and the region, right, like MSGBC, all the supporting infrastructure, you have to now start putting the regulations to support that. Why would it make sense for you to have pipelines that join across multiple countries, but they're not even talking to each other because you have different standards for the pipelines? That happens in some cases. So what's going on now is, and I'm happy that NMDPRA is taking the lead on this and we're supporting them, let's get the CEOs of all the regulators together with key members of the private sector. In Nigeria, that's the major energy marketers association. We're working with them as well, to sit down and say, we want to turn West Africa into a refining hub. What are the critical factors? I think Ashraf mentioned it. Who has crude oil? Who has the market? How can we put a business case together where we can actually go en masse to the market and say, this is a register of bankable Pan-African projects because we've looked at scale, we've looked at markets, we've looked at logistics that makes sense. An example to end I use is, is there anyone from Congo here? And I like to use this example because I was at the Congo Energy Investment Forum earlier this year. It's the Imperatus, good to see you. And one of the things we talked about is that, and they said this at the Congo investment session, Congo is trying to drive its crude oil production from 250,000 barrels to 500,000 barrels, right? Koraf, who's an ARDA Exco member, is a refinery in Congo, but its refining capacity is 25,000 barrels a day. Now, this is a country which has crude oil, has a refinery that's there, and next door is the DRC, which is going to be the 8th most populous nation in the world by 2050, which means it's a ready market. Why would Congo have a small refinery, DRC be trying to look for another refinery, and other countries around? So what we need to start looking at is, can we identify which markets naturally fit together, right? Can we now start identifying who are the key actors in those markets who we can support? Can we now identify how the supporting infrastructure can be put in place to support it? Lobito Corridor is another one I love to use. It's from Lobito in Angola, connects Zambia and DRC. Everybody forgets that the trains that are going to run on diesel. So the thing is, have we thought through how we're going to interconnect all of this? And I believe it's starting, but it needs to work quickly because of the population growth and all of that that's coming. Thank you.
Thanks, Anibor. Very detailed. Jean-Paul, on the trade side, how can trade finance be leveraged to support intra-Africa petroleum trade to reduce dependencies on external markets?
It's an excellent and very strategic question, and especially we have bankers with us, so I will try to be very quick because I'm waiting especially to develop this side on the third question. So, trade finance can play a transformational role in helping Africa reduce reliance on important petroleum products and strengthen, especially intra-African trade, especially under the African Continental Free Trade Area scheme. So first, with the prepayment and offtake agreements with Africa, of course, we will not forget the letter of credits, the guarantees issued by African banks, the Pan-African finance programs, the structured trade finance and collateral management. All this can help creating a regional trading hub and commodity exchanges. So, leveraging trade finance tools like LCs, guarantees, structured prepayment, local currencies, and settlement through African financial institutions can secure the feedstock, we are talking about this now, and product flows within Africa. It can reduce the forex outflows to external suppliers. It can strengthen African refineries' viability and ultimately shift from dependence on global refined products to imports, regional self-reliance. In short, it can bridge the trust gap between buyers and sellers. It can provide working capital and liquidity. It can mitigate price and market risks. It enables large-scale and cross-border trade, support local and intra-regional trade, risk sharing, and de-risking. In conclusion, without trade finance, most large-scale trading activity will be impossible. So it's the invisible backbone, I will say, of global and African petroleum and commodity trades.
Thank you. Thank you. Ashraf, I'll come back to you again on the data-driven insights. What kind of insights should guide African governments in choosing where and when to invest in refinery infrastructure?
Yeah, so I think it's very important, of course, to look into data because then that helps you to take the right decisions. And as Anibor was saying, we don't see today, we don't see enough countries coming together to build, a hub and be competitive because you don't look at the data. You look at yourself and you say, I want to build my own refinery. But when you look at the data, you can actually see what is very important, what is the cost at which I supply myself today, what is the size of the market, and can I be competitive in the market that I am targeting? And a lot of times, the answer is no. And actually, building a refinery again, I think, a lot of times it's not going to be competitive. So you need to really look into the cost of your supply, the cost of your alternative supply, see the size of the market, and then decide, am I the right place to build this refinery or no? And this is very important because we see it a lot, and that's the reality. We see a lot of announcements in Africa we've seen in the last 15 years, but very few actually succeed. We see SAR, for example, succeeding, but a lot actually don't succeed or get a lot of delays. And we did a recent study where we saw actually that beyond the refineries that come on stream, on average you have around 30% delay in capex, capex overrun and delay as well. So that's actually a strong burden in terms of projects. So you need to come together and, of course, decide where is the best place and what is the best configuration to be able really to serve the market in an efficient way. And we see also that now, for example, there are a lot of announcements. Nigeria announcing a lot of capacity coming on stream. Angola is announcing. We see Ghana is announcing. Now Senegal. All of these will not be there, will not succeed. Some of them will not. So it's really important to look with data to the demand, to the supply-demand balance, what is my cost, and then decide what is the right place. And then what Anibor was saying about having a global framework that allows us to come as one instead of being fragmented is going to be very important. We were running a case very recently for a refinery in West Africa, and the question for us was, okay, at what spec do I produce? And then it creates a lot of problems. Then I need the tanks for so many grades. And also because we saw that there is an opportunity in Europe, and then our Europe is again different. We saw there is arbitrage with the US, but the US is also different. So looking into this data and then driving the right politics, I think this is really the way to go forward. And I'm happy that there is, let's say today, a small panel. I hope next year a much larger panel, to really drive this and be able to put African gasoline in our cars.
Okay, excellent. Thanks, Ashraf. Dauda, again, going back to SAR, can you just tell us again, what are the biggest challenges that SAR faces And how are you addressing these challenges?
Ok, c'est une question simple et complexe à la fois. Aujourd'hui, je pense dans mon propos introductif, j'ai parlé un peu de la complexité de nos raffineries, donc il y a une complexité assez simple qui finalement résulte sur des possibilités de traitement de brut assez réduites. Okay? Donc ça, c'est déjà un premier point. Je pense que par la suite, l'un des challenges les plus tenus, c'est un peu le financement. Quand je parle de financement, je parle aussi bien du supply que des projets. J'ai la chance d'avoir un jeune general manager qui vient de débuter à la raffinerie. Après 2 ans, quand je le regarde, ses cheveux sont devenus tout blancs. Bon, les miens sont partis depuis longtemps. Alors, donc, on a beaucoup de challenges sur la qualité des produits, sur le financement, sur la régulation des prix. Anibor est intervenu tout à l'heure sur les différents types de régulation que vous avez à travers l'Afrique. Et ce sont les raffineries, quelque part, qui aussi ont des missions de service public qu'on ne doit pas oublier. Parce que l'État, étant majoritaire dans le capital de ces raffineries, impose quelque part à la raffinerie une participation additionnelle sur l'équilibre en termes de fourniture de produits au niveau de nos pays. Donc ça, c'est aussi un défi à relever. Mais le plus gros défi aujourd'hui, c'est l'existence même de ces raffineries à travers les spécifications. Nous appartenons à une association dirigée par Anibor, ici présent, donc qu'on appelle ARDA. Et cette association lutte et milite quelque part pour l'amélioration de la qualité de vie à travers le continent et surtout par l'improving des spécifications. Ce qui veut dire aujourd'hui, ces raffineries sont en train toutes d'aller vers des projets. Je pense que j'ai fait beaucoup de rencontres ici aujourd'hui et tous les engineering sont au courant que nos raffineries aujourd'hui ont une seule objectivité, c'est d'aller vers l'avant. Donc, d'aller mettre beaucoup d'argent parce qu'on doit installer de nouveaux types d'unités, donc qui sont des hydrodesulfurations, des unités de valorisation du fond de Balir, et ce sont des unités qui sortent du schéma classique de financement des raffineries. Avant, on savait que vous mettez $1 en termes de financement, vous avez 2 ou 3 dollars par baril. Aujourd'hui, le principe a carrément changé. On nous demande d'aller vers une amélioration des qualités et qui, quelque part sur votre business plan, peuvent ne pas correspondre à ce que vous aviez avant. Donc ça, c'est un aspect. L'autre aspect, c'est le supply. Donc le supply, il est divers et varié, n'est-ce pas? On a beaucoup de propositions, mais c'est là aussi peut-être que nos banques peuvent participer objectivement parce que sur les garanties que les banques demandent, il y a énormément de contraintes. Il y a énormément de contraintes que les raffineries doivent, n'est-ce pas, lever. Et quand on quitte le supply pour aller dans les projets, c'est souvent des questions de garantie. Parce que les banques demandent souvent des garanties souveraines que les États peinent à donner. Donc tout ça, ce sont des challenges maintenant qu'on peut corréler au day-to-day, au fonctionnement day-to-day. Vous avez les aspects maintenance, vous avez les aspects formation des teams, etc., etc. Tout cela constitue donc des challenges que les raffineurs sont en obligation de dépasser pour pouvoir avancer. Mais il faut toujours tenir en compte que le pétrole extrait du sous-sol n'est pas utilisable. Donc il doit être raffiné pour aller dans les voitures ou autre part. Donc d'où la nécessité donc, de se réunir. Mais aussi il y a une intelligence à développer auprès des raffineries africaines. Parce que souvent, chacun a son projet. Moi j'ai entendu parler d'un projet de 1000 barils par jour en Gambie, un projet de 3000 ici, là. il y a une nécessité de s'orienter et de corréler tout ça, de mettre en œuvre, de mettre en commun, de pouvoir réfléchir en termes de hub pour mener ces projets-là. Je pense que je ne vais pas trop m'étaler. Merci.
Yeah, thank you. Thank you, Dauda. Gents, less than 5 minutes remaining. Final takeaways. How do we improve our refining capacity? Just a few words to the audience. Wole, I'll start with you.
I think the answer is collaboration. It's frameworks. It's pretty much what everyone else has said on the stage. I think we need to become more creative. I think we need to decide what our priorities are as a continent, as countries, and then we need to collaborate more. There's really not much else to say other than that. Yeah.
Okay, Anibor, anything else?
Well, the only thing I would want to canvas for, since we have the audience here, is to think about, when you think about the downstream, think about the impact LPG for clean cooking is going to have in Africa, and I really want to stress this. And the reason I say this is because when you talk of clean cooking across Africa, a lot of people talk about improved cook stoves and funny things like that. But in Africa, and I can speak about this because refineries produce LPG, I talked about subsidies not working. The only way to actually really ramp up LPG adoption on the continent and for refining to support that is if we can start getting carbon credits for LPG projects. I don't understand why an improved cook stove can get carbon credits, but an LPG project which has been shown to reduce carbon footprint more than an improved cook stove does not. So in closing, I know it's a bit different, but I just want the audience, because you're all going to go to COP, you're all going to go back to your countries and put your NDCs together. Please think about carbon credits for LPG as something that will support adoption and will help refineries to support the supply as well. Thank you.
Thank you. Jean-Paul, final words?
Thank you for talking about refinery, because you always hear our friend NG Ayuk said drill baby drill, and thank you Anibor, because now he started saying refine baby refine, so it means that the refining sector is still alive. And as Dauda mentioned, unfortunately crude is not like wine. We cannot drink it, we cannot use it in its actual liquid, so we have to refine it. If you give me just 1 minute, I would like to talk about the strategic partnership, which is very important in the refining sector. Because there is an example that it's always in my mind, Ruwais refinery. Ruwais refinery is one of the biggest refinery in Abu Dhabi. So what they did a joint venture, a partnership with ENI and OMV to increase the refining. So this could be an example that in Africa we can apply it, the strategic partnership, or to open the equity for foreign shareholders. And at the end, I would like just to say, if exploration production is the heart of oil, a sentence that Anibor likes a lot, refining is the kidneys, right, of the oil. With the heart without the kidneys cannot function, and the kidneys without the heart will stop. So God bless refining.
I love that.
Thank you.
Dauda?
Juste pour dire que, effectivement, les raffineries ont leur intérêt. Aujourd'hui, si nous regardons la majorité de la production africaine est exportée vers d'autres sites, et quelque part, c'est une perte de valeur ajoutée. Les raffineries peuvent beaucoup apporter en termes d'emploi direct, en termes d'emploi indirect, en termes de local content, de skills, de formation. Donc, je pense qu'il est tout à fait indiqué que déjà qu'on ait une harmonisation des spécifications, qu'on ait une harmonisation un peu des participations dans les raffineries, qu'on n'ait pas de mini-satellites raffineries. Mais vraiment, je pense que notre message sera entendu ici, et je remercie aussi l'assistance pour vraiment l'intérêt qu'il nous porte en venant assister à cette séance. Merci.
Merci beaucoup. Thank you. Ashraf?
Yeah. So I want to end this by saying that, okay, developing refineries is complex, but actually there is a step before that, which is strengthening the existing capacity that is there today in Africa. You mentioned at the beginning, utilization average is 60%. So if we just manage to increase the capacity through operational excellence, maintenance, reliability, training of operators, that is a quick win and can unlock massive value already for Africa. So I would encourage everyone to really focus first and foremost operational excellence.
Okay, thank you. Anibor.
Sorry, one last thing. Just to see if you're still awake. Raise your hand if you're going to be 40 years old or younger by 2030 in this room. I see one. Dauda, you're older than me. 1, 2. All right, so in this room, you only have 3 people. And the reason I do that is basically this. If you want to add value, the machines will not run themselves. Where's the human capacity? What are we doing about putting in place the human capital to deliver these lofty ideas that we have? We need to ensure if you're going to get financing, if you're going to do any upgrades, you need to have the people. So given that we're competing with content creators, we're competing with TikTok and all kinds of things for human capital, we need to start energizing our industry and training our people so that we can really achieve our true potential and really get the value addition. And I'm looking at you, Fumi, and your training program that we're going to put together. So please, human capital development is critical. Without it, everything we've said here today is not going to work. Thank you.
Thank you, ladies and gentlemen. You've heard the panelists, you've heard the experts. So let's move from dialogue to delivery. Whether you're a policymaker, investor, operator, advisor, let's all commit to the next steps. Thank you very much, and thank you to the panelists.
Thank you.